The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to this special midweek webinar. I'm Devarsh. Today we are going to discuss about our retail research performance over the last 1 year, and also my colleague Nagaraj is there. He will share the views from the technical analyst perspective about the short-term market. So first, let's look about the performance. So 194 5 calls were issued last year. 184 profit book, 11 loss book, 94% is the success ratio, average 15.5%. These are the some of the stocks which we have been able to identify last year. Stocks like Jindal Drilling, Patel Engineering they have done fantastically well. This was compared to about 8.7% return. It has improved to 15.5 compared to FY23. Similarly, for technical analysis, 455 ideas in the cash trading side, 238 in the e-margin side. 83 and 75% is the success ratio, 22%, 2.2% is the average return for cash trading, and 5.3 is in the e-margin. So this is to highlight that the recommendations which are being issued by the department, which have been coming out by all our team, are doing fantastically well. I would like to have close look at all the recommendations which team is coming about and try to benefit maximum possible. Share it with all available clients and our associates. With that being said, let's try to look at how markets are behaving. What is the outlook for the short term? Over to you, Nagaraj. How are markets looking?
Hi, thank you, Devarsh bhai. Good afternoon, friends, and welcome to Midweek Market Outlook webinar. Rightly said, Devarsh bhai, market is looking range bound right now. Friends, we will discuss with chart, looking at the chart. Devarsh bhai, is my chart is visible? Is my chart visible?
Yes, it is visible. Go ahead.
Okay. Yes. Friends, we'll discuss about the market from the smaller to larger time frame. What has happened, friends? On the Saturday, we have made this fortnightly webinar, and we have discussed the market about the things how market has panned out. And recently, we have seen some upside momentum from the lower levels, and Nifty showing consolidation. Start from the intraday time frame, friends. What has been happening over the last 3 sessions is a range bound action. This is a kind of a range bound action is happening, and minor selling is emerging from the higher levels. Today's we have seen market opening at the higher levels, made an attempt to move up in the early part of the session, but was not able to sustain with the upside momentum in the mid to later part of the session. And we have seen finally we have seen minor consolidation or a minor dip in the market. On the daily time frame, friends, this is a picture. You can see the ascending channel pattern, which is market is respecting over the last many months. And on Friday, we had discussed in the last webinar that market has formed a higher bottom reversal pattern. Somewhere around 21,770, 780 levels, Nifty formed a bullish piercing type of pattern. And after that, we advocated the market to move up in the near term. Indeed, market has moved up in the last a few sessions, but in the last 2 sessions was mainly of a range bound action. There is a reason why market is moving in a range bound is the presence of a strong resistance. And in that last webinar, we have mentioned that market is forming a bottom reversal, made some positive pattern, but confirmation of the pattern was required. But here the market has confirmed the pattern, moved up, and currently placed at the resistance. The resistance of this opening downside gap of 15th April, somewhere around 22,500 is offering a strong resistance. What is happening over here is market is placed at the resistance around 22,475, 500 levels, but is not showing any sharp declines. This is indicating a little positive bias for the market, even though market is showing a sideways range movement on the daily time frame in the last couple of sessions. We expect that this range bound movement could eventually result in upside breakout of this a strong resistance of around the 22,500 levels. Once it breaks above this hurdle of 22,500 levels, the next upside levels of around 22,800, which is happens to be a new all-time highs, could open and market could reach towards that level. This is the broad scenario. If you look at the weekly chart, you've seen weekly chart market was showing a gradual up move after a downward correction from the highs, quick 1,000 points decline from the highs in the last couple of weeks. Nifty has bounced back from the later part of the last week and continued its upside momentum. Once Nifty moves above this weekly gap resistance that I mentioned on the gap opened on the 15th of April, around 22,500 levels, the real upside momentum could take place on the higher side. In that case, I reiterate that we could expect the next higher levels towards the new all-time high. Till then, the range-bound movement, sideways consolidation movement is likely to continue in the benchmark. But if you look at, friends, if you look at the broader market indices, like this is a chart of mid-cap. But mid-cap and small caps are continuously outperforming. And after a decline of last couple of weeks, the mid-cap has moved up. In fact, outperformed the Nifty, currently closed around 2.65 levels on the weekly so far this week. And we are to move around another 2 days of a week. And I'm expecting this mid-cap is likely to move up. This is the chart pattern of this mid-cap. After a smaller decline, it has bounced back from the lower levels since mid-cap, currently placed to move towards the new all-time highs above 50,600 levels. In the next few sessions, we are likely to see a continuation of outperformance in the mid-cap stock, mid-cap sector, and we could see the all-time high formations in the mid-cap. At the same time, small cap is also doing well. We have seen a new high formation in the small cap around 16,822 odd levels. This weekly chart pattern is looking positive. In fact, small cap is looking far better than mid cap and moved into new all-time highs. The chart pattern of broader market indices like mid and small caps are positive. Even though benchmark is moving sideways range movement and mid cap, small cap sectors are positive, there is a possibility that traction in the some of the selective mid cap and small cap stocks is likely to move up. Our advice is to saying that you can hunt for the accumulation for the mid-cap, selective mid and small cap segments. We are likely to continuation of upside momentum in the broad market stock, especially in mid and small cap stocks. Some of the sectors are outperformed today, especially in metals. After a continuation of consolidation movement, metal has moved up on the global news today. A small consolidation has resulted in a upside breakout in the metal stocks. We can see it from the chart and moved into a new all-time highs. At the same time, PSC is also looking positive and realty is also looking positive. They are all placed at the higher levels and after the consolidation moment. On the other side, media, IT is not that much positive in that it has made an attempt of upside bounce from the lower levels, but in today's session, it failed to continue with the upside momentum and slipped into decline. So I'm expecting a metal, PSC, realty are likely to outperform in the near term. At the same time, media sector and IT are likely to consolidate. And on the other hand, the broad market indices like mid and small cap, as I mentioned, are likely to continue into a positive territory. We could see some good traction in the mid and small cap segments. So that's all from my side. Over to Mr. Devarsh.
Okay. So now let's try to take some questions. Depending upon the equipment you are using, you should see a question mark on your screen. Please press that question mark. A window will pop up. You can type in your question. We'll try to answer as many as possible. So by the time questions are gathered, Nagaraj, do you see any particular sector where traders should keep an eye for the next couple of sessions?
Yes, as I mentioned in that session, that I'm expecting this broad market index like mid and small caps are looking positive. Even small cap has made a new all-time high today. Mid cap is on the verge of moving into new all-time highs. Even though market is showing rainbow action, these indices are looking very positive. I'm expecting a traction to continue on the upside in the selective mid and small cap segment. My advice would be when we look to buy a selective mid cap and small cap stocks towards further reasonable upsides.
Okay, so smaller mid cap and small cap stocks are likely to do well. Is it possible to see the recording? Yes. So HDFC Securities YouTube channel will have this session. You can look at this and go through this webinar again on our YouTube channel. If you have any questions, you can type in to the chat box and we'll try to answer as many as possible. We won't be able to answer any stock specific question. So Umesh is asking if 22,500 does not breach. If 22,500 is not breached, then again, as Nagaraj pointed out, we can go back to the lower end of the upward sloping channel. And recently we have found support there. So if we do not cross 22,500, then again, we will go back to 21,700, 800 kind of a levels where we found support. And depending upon the cues at that level, we will take action. So 22,500 is important resistance, needs to be crossed. Rakesh Jai is asking, how do we access the FNO recommendations? So there are three ways you can access our recommendations. First is through our website, HDFC Securities website, or our trading portals, on mobile app, and through our relationship managers. So you have many options to access our research. Badrinath is asking is, as per the data, gap up is possible tomorrow. So whether markets are going to open higher or lower depends upon how international markets behave, especially the American markets, how those markets are closed. The derivative data will come where what kind of action has happened today, plus the institutional activity. All these things go into determining whether markets are likely to open higher or lower. That will be available tomorrow morning. And depending upon that cues, we will come out with a morning commentary as well as morning podcast. Mr. Badri, you can go through the morning podcast where we will indicate whether markets are likely to gap up or not. Okay, so where do we see the trainings? HDFC Securities do conduct a lot of training for how to read technical charts. What about the fundamental, how to read the balance sheet and all. So these kind of training is available. HDFC Sky is also an app where we have come out with a learn segment. You can go to hdfcsky.com under the education section. You will see a lot of videos there. All right, I think I've answered all the questions which are there. Thank you, Nagaraj, for joining. Thank you, everyone.
Thank you. Thank you, Devarsh. Thank you, everyone.